Good morning and thanks so much for tuning into the trade setup with me, Niraj Shah. It's a packed day today. We're coming back after a holiday, after Mahashivratri, and after nearly 45 days of the Mahakumbh finally coming to an end yesterday. Did it spell good news? Well, let's wait and watch. First, the global news flow. S&P 500 futures are little changed after the index snapped the 4-day losing streak. The 10-year Treasury yield inched lower on tariff uncertainty, as well as maybe the US economic slowdown that is somehow starting to become a bit visible. Oil has held the 2-month lows amidst the Russia-Ukraine talks, again maybe also due to the slowdown. Nvidia sales grew 78% on AI demand. They have given a strong guidance, but it pales relative to the last 2 years, I must say. And amidst other news, there's a bit of a worry in the US as well. America is in the midst of a record-breaking bird flu outbreak. And remember, the current administration is not in favor of vaccines. In fact, Robert Kennedy Jr. was critical of the COVID vaccines as well. So it'll be interesting to see how this shapes up for them. But this is what the US markets did. The Dow was down, but the Nasdaq and the S&P were okay. Dow futures currently little change. Asia, mixed, if you will. No great moves for our markets, which had a bit of a holiday yesterday as well. You're probably looking at a placid start, if you will. But this is the zone around which people, even the skeptics, are now starting to find a bit of a value. So keep that at the back of your mind. Okay, what's the trade setup for the day looking like? I think the cooling dollar and the rising China flows are positive for emerging markets by and large. Now, whether that goes only to China or goes to the rest of the region, that is anybody's guess. Remember, in September, October, a lot of people are saying that what is China's problem is not just a China problem, it's an emerging market problem, because emerging markets are being held as a basket for now. It'll change at some point of time. There'll be India-dedicated flows. China and Japan will have their own dedicated flows. Let's see. But for now, that's not bad for EMs by and large. I think the risk weightage reduction by the Reserve Bank of India for banks and NBFCs could help banks and NBFCs lend a bit more aggressively, and that may actually help the sentiment around BFSI. So I think I'm looking for Nifty Finance or Bank Nifty, whatever in the session today, to do well. So that is something you got to keep in mind. What else? I think metals, and there is a reason why I've spoken about metals, because of the China moves. Remember that I think that they are still a trading play, but the replacement cost factor argument is attractive. A lot of people believe that now if you compare it to the replacement cost, there is not enough capacities that can be set up at the current steel prices, for example. And therefore, steel prices at some point of time will go up naturally in India. Add to that the fact that China is making these moves would mean that metals could actually have a good day today. So keep an eye out for that bucket as well. The Nifty levels in focus. Remember, if we close lower today or around these levels, Nifty will close the Feb series in the red as well with the monthly expiry. This would mean that there are 5 consecutive series in which the Nifty has closed in the red. This last happened 28 years ago in 1996. We are certainly sold down well. The question only is, when do we bounce back? Let's wait and watch. Let's get specific pockets in focus today. And there's a lot of India-specific moves that will happen. There are sector-specific moves that you should keep in mind. First one, financials. RBI has normalized the risk weights on banks, NBFC credit, as well as MFI exposure. Effectively, the risk weights were carried higher. So unless the banks met those risk weightages, they could not lend. Now that there is some bit of normalization, this could help banks and NBFCs lend a bit more. Banks with higher MFI exposure that took impact will see the unwinding of these norms, and therefore better lending and better sentiment. Now, if this confuses you, let me simplify this with the next 2 brokerages as to what they have said. CLSA says the biggest beneficiary of the risk weight reduction is Bandhan Bank. So you got to watch out for this. And I think Macquarie has said that the increase in CET1 is going highest for Bandhan Bank and IndusInd Bank. So effectively, stocks like IndusInd Bank, Bandhan Bank, I think Federal Bank, these are the ones that will benefit the most. But I would reckon that this will augur well for all forms of financials today. Banks, some of these banks, maybe even MFI institutions, select NBFCs. So watch out for this whole bucket of stocks. Then the cable stocks are in focus. Ultratech has said that it is going to foray into the cables and wire segment with an 1,800 crore investment. Now remember, viewers, just take your mind back to what happened to the paint sector when Birla announced its foray. I'm not saying the same has to happen. The two sectors are different. But as the city guys said, fragmentation leads to some bit of reduction in multiples. Now, what's happened? Now, the question is just this, that can Ultratech's entry in the sector mark fragmentation and lead to the valuation re-rating? This is the question that I ask. I suspect the answer is a yes, and I suspect, therefore, that the cable and wire companies today could come under a bit of a stick. Now, which are the ones that you got to focus on? Let's first talk about those stocks. So, KEI, Polycab, RR Kabel. Nuvama says, though, that given the cable and wire industry is likely to sustain a strong 13% CAGR and emerging opportunities in exports, entry of Ultratech Cement may have only a modest impact at best in FY28 or onwards, which is less than 5% of the total industry then, in our opinion. This is on account, let's move on, this is on account of the fragmented nature of the cables and wires industry. The largest player has less than 18% market share, distribution nuances and approvals for cables which take some time. So Nuvama believes that it will not have a large impact. In fact, Jefferies in a note has also mentioned this, that they have note on KEI, and they said that 55% of KEI sales consist of power transmission, industrial cables and exports, which require 2 to 4 years for pre-qualification. So the near term, it may not have as much of an impact. 45% is retail, where potential impact could be largely offset by power and exports. 7 to 8% NPM should limit new competition's ability to engage into a price war or a price discount scope. It's not a high margin business. There's only as much discounting you can do. So brokerages which track the cables and wires industry are a little bit sanguine about this. Let's wait and watch. In fact, people have come out with view on Ultratech as well. The cables foray, according to Citi, could hurt the company's positioning as a pure play cement company. However, I believe there is Access Capital or somebody else which is saying that they are constructive on the clientele opportunity, meaning that Ultratech has B2B clients which are builders, and they might actually want to buy the cables from Ultratech as well. So over the long period, it could augur well for Ultratech. Let's wait and watch. Today, I think the power and cable companies could come under a bit of a cloud. Now, metals would be the third sector in focus. China is going to inject at least $55 billion in fresh capital into several banks as per a Bloomberg story. And this has gotten the global steel stocks excited. I would suspect that some of the Indian steel stocks as well could be excited today. Nuvama Wealth in focus. Bloomberg says that Blackstone-backed PAG may sell $1.2 billion worth of stake in Nuvama. This should essentially cap any near-term upsides for Nuvama. Even if there's no downside today, they should cap upsides. So keep that at the back of your mind. Let's move on to others. Dr. Reddy's. US FDA has conducted an inspection at the API manufacturing facility in Hyderabad. It has been classified as VAI, which is actually okay. I mean, let's wait and watch how Dr. Reddy's reacts today. This should be construed positively, not negatively, let me put it that way. Bharti Airtel is in focus. They have confirmed that the company is in discussion with Tata Group for Tata Play and Bharti Airtel Digital, Tata Play and Bharti Telemedia. They are going to explore potential combination of both of these. It's not a dramatically large piece for Airtel, but net constructive. Maybe the stock reacts. Let's wait and watch what happens there. I'll watch out for some companies which have gotten order wins. So Mastec, multiple contracts worth $85 million. The second one is Vari Energies has received an order for supply of solar modules for 410 megawatt. And Cupid has received an order worth 42 crores from Tanzania. So these three could be in focus from amongst the brokerage names. I've already given you a lot more. Probably give you one more. I think there is a Kotak note on Hindalco. They are constructive. They believe misplaced concerns make risk reward attractive. Their target price is 725. They believe scrap credits have bottomed, unlikely to worsen further, and a number of other factors why they are constructive on this one. So keep an eye out for this as well. Thanks so much for tuning in to today's trade setup.